Good morning, everyone. I'm Vince Lancy. It's 9:20. Wow. We had a computer meltdown today, a graphics card disaster. I apologize for the delay, but here we are with the whole thing. We're actually going to include the impromptu one I did at the bottom just for your for a humorous take. Okay, today we're going to go through four stories that came out over the last 2 days to help you tie everything in and what's going on. The first story, silver trades $82, China takes action, and the LBMA worsens. Second, and this is exclusive, don't blame China for silver shortage. Third, silver rises despite the China ETF silver plunging. And fourth, China silver trades $82. The last thing we're going to bring up is today, well, let's put it this way. Last night, Eric Young and I had a conversation, as we are wont to do when it's 11 o'clock his time and 11 o'clock my time, and or 10 o'clock actually last night. And we tied together, as is our habit when we get together, a couple concepts that people aren't looking at yet, and we're pretty confident we're right. You may recall Eric and I have collaborated on ideas in the past, such as the HQLA trade in China, the warrants, the HQLA, and the repo, which have yet to happen yet, but we are no less confident than we have been. This one, however, is almost a little bit of a Tom Luongo in us. We should have him on for this one. But essentially, we're tying the whole thing together. Silver, rare earths, China, all the things coming down the pipe in the biggest, most important part of the structure yet. Let me adjust this. There we go. All right. And there's Eric's moniker. I'll leave that avatar up there while I go through the markets. 10-year yields are down 1.5. The dollar is down 4.5. The S&P 500 is up 5.5. The NASDAQ is up 24.5. The VIX is up 60 basis points. Okay. China gold, Shanghai futures are trading 46.75. China Shanghai futures silver is trading $81, up one on the session. It closed at 80 last night. Spot gold is 45.23, 44, up 44. Spot silver, such as it is 74.92, up 314. WTI is 58.04. Natural gas is up 12. Bitcoin is up 1,700. Ethereum is up 80. Palladium is up a whopping $134, $136 at 1850. Platinum is 2402, up $149. Gold silver ratio, as you can expect, is lower. Soybeans, corn, and wheat are all up. Okay. We're going to go through what this means right now. Okay, so stay with us. Now, our top story is an amalgamation of what's going on, and you're probably not going to hear this anywhere else for some time, but it is correct. Silver is trading near $81 an ounce as sharp price premiums in China, ETF disruptions in China, and rising stress in London point to mounting strain in the global physical silver market. Now, silver's latest surge is being accompanied by growing signs of stress across key physical market hubs. In Shanghai, futures prices have traded at a persistent premium to Western benchmarks, signaling tight local availability and strong demand for deliverable metal. Chinese authorities, we have noted, have issued public warnings against hoarding and speculation, while a major silver ETF saw sharp price distortions as investor demand overwhelmed its structure. At the same time, conditions in London's bullion market have worsened, with elevated swap rates indicating difficulty sourcing physical silver. Together, these developments suggest the rally is increasingly, without a doubt, driven by physical constraints rather than leverage or speculative positioning. The complete story can be found in our post last night titled Silver Trades $80, which has really went up to 82. China takes action and LBMA worsens. We promise you, this is the record of what's going on. This is how to piece it together. Now, moving on to the news within that news. Exclusively speaking, China is publicly warning against silver hoarding and speculative trading, saying recent price swings are being driven by behavior that threatens industrial supply and fair market order. China's top discipline and market oversight bodies issued a public notice addressing what they call abnormal price fluctuations in silver, citing excessive speculation and artificial hoarding rather than changes in industrial demand. In the statement, authorities said China's silver production and usage remain broadly stable, but warned that leverage trading, inventory hoarding, and misinformation are disrupting supply chains. Regulators signaled tighter supervision, potential penalties, and exchange controls to protect industrial users or maintaining orderly markets. Now, a little color on this. Over the last few weeks, people in China, in the mainland, who understand the market, like our friend Bao Xiaojun, he's a colleague and someone we have co-written numerous pieces with, who actually predicted this eventuality with us, has himself been less bullish of late because he understands the global situation better than most. We will reach out to him again later today. The situation is this, and we also wrote about this in this story. China does not want to be misperceived as a bad actor on the world stage. The problem is in the LBMA. They do not want to be seen as exacerbating it because they depend on exports of trade. Their trade partners are everyone, are us. Okay. Internally, the BRICS want to see that they're playing well as well, because if they're going to lead the BRICS into the next phase of the world global order, well, then they have to play well in the sandbox. And so China is making sure that they are perceived that way. You can read that story in the Post, exclusive. Don't blame China for the silver shortage. Next. China's pure play silver fund is going to close. That's a prediction, not a fact. China's only pure play silver ETF hit its daily limit down in Shanghai, snapping a speculative rally even as global silver prices remain near record highs. China's sole dedicated silver fund, the UBS SDIC Silver Futures Long Only Fund, LOF, fell by a maximum 10% daily limit in Shanghai on Christmas Day in the West, ending a sharp speculative surge. The drop followed repeated warnings from the fund manager that the product was trading at a large premium to its underlying Shanghai-listed silver futures. Regulators and the fund manager had tightened subscription rules to curb short-term trading as investor interest in precious metals remained elevated and silver prices sit near record levels. We can add to this, as we already have in a founder's post we also put out yesterday, that we predict that this fund will freeze intake altogether. And in doing so, it will or is currently driving Shanghai premiums likely even higher before the situation is arrested. Assume capital controls are coming to Shanghai. Assume China needs to quell the froth due to poor market structure. Specifically, the long-only fund is not arbitrageable. They don't have to buy futures because it goes up. It goes up because people buy futures. When you tell people they can't be in a fund that has a net asset value below where it's actually trading, well, they're going to sell the fund and they're going to roll into futures. So the futures premium is going to expand. There's limited product in China and there's excessive demand. There's not enough product. Expect to see more products coming soon. Read all about that story with insights you will not find anywhere else again in Silver Rises as China Silver ETF plunges. In closing, I'll put Eric's avatar up there again. In closing, before getting to the price action itself, what does it all mean? Well, there is much more, and we will tie it all together in a bigger picture for you later this morning as Eric and I have a very special geopolitical real-time conversation, trying to recapture the magic of last night. How our world has changed seemingly overnight for those who have not been reading GoldFix or Eric's social media feed, which is a must follow. We will do a joint venture mini pod on these events and listeners and others to tie it all together for listeners. In addition to that, we will give a much bigger picture, really big picture, and you're going to say, holy shit, this makes sense, because that's what we said. on how silver is indicative of and part of the larger play splitting the world in two, which also involves Venezuela, Nigeria, all metals, rare earths, and all energy worldwide. Look for that later this morning. You will know, or at least know what could happen before anyone else, as only Eric and myself can provide. Now, in addition to the above, really editorially speaking now, there are growing pressures. This is kind of another prediction. There are growing pressures on the LBMA to reprice its spot market to reflect current market economics, as they are neither making markets, committing to sales, nor receiving metal, as their buying prices are just too low. They are shut down. If they had metal to sell, they would raise their price in spot and sell it. They don't have metal to sell, so they're pricing themselves out of the market. In trading, that's called a non-competitive bid, a non-competitive offer. They don't want to play. All right. Now, why would you do that if you're in the business of buying and selling? Because you got none to sell. Because the derivatives book that's at the center of the LPMCL, that derivatives book, which is basically four banks that borrow from each other when they need it to facilitate transfer of metal without actually moving the metal, that book is frozen. This is four banks that don't trust each other at the credit level. It only takes one. And this is a derivatives market at the hub of a physical market. This goes on in every interbank dealing market in the world. Bonds, you do it in bonds all the time, okay? You have a neighborhood, utilities. Utilities borrow and lend from each other a cup of sugar whenever they need it. They do that in silver as well, but they've all, not all, some of them have been cheating. They don't have the metal they say they have. They've been giving IOUs to other banks. Banks have been representing that metal being used. You've got multiple takes. You've got multiple claims on metal, I believe. Otherwise, they would be fucking doing business and selling it at $82. Right? Okay? They're shut down. Why do you think JP Morgan is moving to Singapore? Why do you think JP Morgan took metal off the market in COMEX? Why do you think all this metal is coming in from Latin America to the US? Why do you think? I'm going to get into that in much more detail with Eric, who really tied a couple pieces together that I missed. Keep in mind, all of this is happening that we just described while the Middle East readies a tokenized silver product. The U.S. has listed silver as critical. Russia has begun buying silver for its balance sheet, and Indians are now permitted not to sell their silver and instead use it as collateral for money. Every nation on earth is now protecting its critical minerals, and silver is the most undervalued asset on earth. This is no bubble. This is silver exiting a crater, and capital controls and rationing will stop it. Finally, remember that in the US, 401ks will be eligible for metals in February, and China's restriction of all imports goes into effect in January. So let's move on to the price action, which is secondary to everything we've been talking about. So there's gold daily. Okay, so we're trading 45.30. Price doesn't matter. Nations have been printing money for the last 2 years to buy metal, and the cat is getting out of the bag now. China does this. I don't want to give too much away what Eric and I are going to talk about, but this is the behavior of China in base metals coming to precious metals. And this is London closed for business. Tom Luong is going to love that. And you know what? I kind of do too, in a sense. But there's the chart. There's the daily chart in gold. Here, I'll let you bring that up for a little chart porn. There's Shanghai. Here, I'll make it a little bit easier for you to see. There's Shanghai futures. I think that's a Feb contract for them, or January. I'm not sure. There's Shanghai silver March contract trading 82. There's US gold. No, not US gold. There's spot gold as London represents it. There's spot silver as London represents it. There's copper up a mere 4.5, 4.75, 4.33%. And that's it. There's nothing really else to talk about except that for the last 30 years, I'm telling you guys, it's happening. For the last 30 years, the precious metals market has been forced to become a financial market, and they've dissuaded people from owning metal. You don't need it. Just short the dollar if you're bullish gold. You don't need the silver. You can use something else. And now Asia and the BRICS have said, no, we want the metal because you guys aren't trustworthy on the dollars anymore. Gold doesn't care, and silver's right behind it in terms of counterparty risk. And guess what? The bullion banks in London and the LBMA for decades have been treating silver like a purely financial product when there is no silver to borrow anymore. It's over. Okay? The world is split. I'm Vince. Have a good day.